US close to allowing Anthropic to restore Fable 5 model, Axios reports. That single number resets the market's playbook. The key question is not what happened, but what changes next for operators and users. We will map trigger, incentive shift, and downstream impact before the close. Export controls. National security review. The kind of regulatory friction that can stall a startup for months. But yesterday, sources told Axios the US is close to reversing that decision. Not a done deal yet, but the trajectory is clear. And that changes everything about where AI scaling goes next. First, the context. Claude 5 was Anthropic's most advanced reasoning model. Better at complex analysis, coding, research tasks, the kinds of work that drive enterprise contracts and competitive positioning. When it got restricted, it wasn't just about Anthropic's revenue. It was a signal about how seriously the US government is treating large language model exports. China restrictions. Chip export limits. AI capability controls. This was part of a larger playbook. But here's the pivot. Allowing Claude 5 back into public access, and specifically in Anthropic's product line, suggests the US has settled on a different approach. Not blanket restrictions. Not a ban. A managed release with conditions. Probably reporting requirements, audit clauses, maybe limitations on how the model can be modified or retrained. The details matter, but the signal is what counts. The administration has decided that restricting Anthropic's capabilities is riskier than trusting them to operate within guardrails. Why does this matter for markets? 3 reasons. 1. Anthropic's valuation and runway. The company raised at a $15 billion valuation last year. But without a world-class model in production, that valuation is theoretical. Getting Claude 5 live again accelerates revenue. It puts Anthropic in position to compete with OpenAI's GPT-4 and Gemini 2 on equal footing, not as the delayed player, but as the fully capable contender. Enterprise deals unlock. API revenue accelerates. That's the bet markets have been waiting for. 2. The regulatory precedent. If the US approves Claude 5 without major strings attached, it signals that AI capability restrictions are not going to be the primary tool of AI governance. That opens the door for other models, other companies, and other scaling efforts that were on hold waiting for clarity. Mistral. Databricks. Independent researchers. If Anthropic clears the bar, the others have a path. That's a massive swing in how the entire AI ecosystem can move forward. 3. The geopolitical calculus. The US has been walking a tightrope, protect national security from China, but don't strangle domestic AI innovation. Claude 5's approval suggests the administration has decided that keeping Anthropic competitive globally is more important than restricting a single model. That's a shift from the aggressive export control stance of early 2024. It's not a reversal. It's a recalibration. And recalibrations tend to cascade. Now, the counterpoint. Approval isn't done yet. Axios reported, close to allowing, which means there could still be conditions, delays, or complications. The model could come back with restrictions that limit its utility. There could be compliance overhead that slows Anthropic's ability to iterate. And approval for Claude 5 doesn't mean approval for Claude 6 or Claude 7, each model might face its own review cycle. But here's what's worth watching over the next 48 to 72 hours. Will Anthropic announce the approval publicly? Will they give a timeline for restoration? Will they disclose any conditions or monitoring requirements? And will other AI companies, OpenAI, Meta, xAI, Mistral, get asked the same questions or asked to prepare similar compliance frameworks? The meta signal is this: AI governance is shifting from restriction to managed permission. That's bullish for AI adoption, bullish for capital flowing into the space, and bullish for companies that can prove they can scale responsibly. Anthropic's Claude 5 restoration isn't just about one model. It's a benchmark for what the regulatory environment now allows. If you trade tech stocks, follow AI infrastructure companies, or care about where AI policy is headed, this approval is a turning point. Not the end of the story, but the moment the US chose managed innovation over containment. That choice compounds over quarters. Watch for the official announcement. Watch for the conditions. And watch for who moves fastest to capitalize on the signal that capability-based AI is back on the table. That's where the real value gets created next. Stay on this. The moves that follow this approval are the ones that matter for your portfolio. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next.